Hey everyone, welcome to High School Dropouts Advice. Today I want to talk with you about Albemarle. Albemarle is a mining company, it's a specialist for lithium, bromine and catalysts. The company has been around since 1994 and got over 6,000 employees. Lithium is the main ingredient for our modern day EV batteries. We had a nice rally during the pandemic to our current rate of $157 per share right now. Today I want to start with the earning release because I want to show you that a bad looking earning release does not necessarily mean your company is doing badly. So let's jump right into the earning release, which was released on the 17th of February. Right on the top we can see that the net sales has decreased by 11.4% and the earning per share has decreased by 32.4%. This looks horrible, right? Yeah, it does. But we need to understand in what stock we are investing. We are investing in a mining company which produce lithium, bromine and catalysts. So let us see the next page of the earning release and see what has changed. You can see that the net sales for lithium and catalyst has dropped. Lithium dropped by 12.8% and the catalyst dropped by 30.7%. Where do these drops come from? Let's talk about the catalyst first. The restriction in travel due to the pandemic has decreased the demand for catalysts. Lithium, on the other hand, suffered some price drop and demand drop. So how can we explain this? I can tell you that EV production did not start yet, but we have more lithium on the market than EVs being built. We don't even have enough EV batteries manufacturers. We have 13 gigafactories being built now in Europe. Companies like Panasonic, the third largest EV battery manufacturer and partner of Tesla, are just starting to build a gigafactory partnership with Toyota. Another gigafactory should follow in Norway in the next year. By the way, I linked the video with Panasonic up here and in the description below if you are interested. So at the moment we have more supply than demand, which should change drastically from 2022 until 2025. So now we understand that the company is quite sensitive to swings in the lithium price. If the price is low, the earnings will be low. If the price of lithium is high, the earning will be increased. If we understand this, we can find the perfect time to buy the stock. First of all, we need to make sure that lithium will be in demand in the future and that the price will rise. Because we need to remember, higher lithium prices will result in higher earnings. Higher earnings means higher stock prices. Here we have a source from mining.com stating that we will see a lithium price bounce after 2022. I think it will be more in 2022 because we will have the first gigafactories complete for EV production and the big wave of EV production of the most traditional car makers is starting in the end of 2021. Let's add another source here from BN Americas because it's never wrong to have too many sources. We are happy to see that he says there will be a deficit in the market in the coming years. All this is good news for our stock. So now we need to find the perfect time to buy. So what prices do we expect for 2021? For 2021, we forecast stable prices, perhaps with slight improvements towards the second half. 2022 could be the year lithium compound prices start to rise. This is the source. This year's stable prices can translate into stable stock, or maybe even better, dropping prices. Let me show you the lithium market prices so you get an idea of where we are. We can see that the prices are recovering, or it looks like it found its bottom. In the graph below, we see China's prices, the biggest buyer and supplier of lithium. China's prices are increasing, which is good to see because China is the biggest supplier and buyer, so they dominate the market price. This confirms that the trend should go back up. By 2025 though, demand is expected to outstripped supply by nearly 228,000 tons. So now we can estimate that lithium prices has found its bottom and should go up from now. This also means that our stock should somewhere in this year find its bottom. But should we buy it now? Give me a couple more minutes. Let's finish the final part because we need to consider a couple of things. What are our company's plan and who are the competitors? We need to do our due diligence right. Doing it right means we cannot take shortcuts. We face one problem. China has a very strong position as a buyer and supplier of lithium. So this situation can negatively affect Albemarle. So I was quite happy to find this. Albemarle to partner with DOE for breakthrough lithium technology. DOE is the US Department of Energy. It's always good to see a company working together with the government. Even better is this: enable US lithium independence. This means the US wants to become independent and have enough lithium supply without buying it from foreign companies. I have to tell you, lithium is the oil of the future, and I'm not the only one. Look at this source. Andrew, borrowing from the investor place, is saying the markets will be in complete disequilibrium and prices of the commodity will ratchet higher, suggesting big returns for investment made today near the bottom. Lithium battery technology will last your lifetime. The plan Albemarle has for the future demand is expansion. They are building their La Negra mining site in Chile, which should be done in mid-2021. There might be a couple of months delay because of the pandemic. Then we have another expansion in Kemerton in Australia with sales production starting in 2022. This is all good news. Before we dive into the competition, please subscribe to my channel so you get updated about exciting stock news. And if you did not open a brokerage account yet, then I can recommend you Webull. You get 2 stocks for free, which value up to $1,850 with a deposit of at least $100. So let us have a quick look at the competition and decide what we should do. Let's look at the largest supplier, Ganfeng Lithium, with an insane price to earning ratio of 493 times. So why is this PE ratio so high? One of the big reasons is Tesla. Tesla is a big customer of Ganfeng Lithium. Let's have a look at another lithium giant, Sociedad Química y Minera de Chile, or in short SQM. I prefer the short version. We see a PE ratio of 91.98, which is still very high. I can tell you that many lithium mining companies are trading with a PE ratio of around 100. Let me show you another lithium mining company which recently partnered up with Tesla. Sichuan Yahua Industrial is trading at a PE of 141. Now let's us have a look at Albemarle, which trades at around 45.99 prices to earning ratio. So it's compared to the other companies relatively cheap, and you get 0.95 in dividends on top. Yes, it's one of the cheaper lithium mining companies out there. And with the lithium price at the bottom, my strategy is to strengthen my position in the stock over this year. I plan to buy some stock every month so I have a good cost average. It's impossible to time the market, but you can control time in the market. So a good cost average is enough when you know that the stock is nearing its bottom. So I hope you learned something from this video. A bad earning release does not always mean bad. It can sometimes be the opposite and can be the bottom of the stock. So I will strengthen my position in Albemarle for the long term because lithium will be the new oil. I have to say, I'm not a financial advisor, I'm just a guy on YouTube. Remember, your money is your responsibility. Many thanks. See you hopefully in the next video. Thank you. Bye.